All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta. I'm your host. I'm joined by Derrick Oldensmith, the head trader with T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. It is quite a week, Derrick. We have a lot to talk about. So before we start talking about the market, let's just quickly take a look at Derrick's current positions as of our recording here today. Again, he is the head trader with T3 Trading Group. So for disclosure purposes, this is what he is currently in. As of our recording. Okay, the title of our stream today, Derrick, is MAG7 earnings plus the Fed, and I could have added plus a trade deadline in there too. It is a really big week for the market. For you as a trader on Monday ahead of a big week like this, how are you setting yourself up for the action?
Sure. I mean, the news flow has been constant, but this week should be especially interesting. The market rally continues. The trend is still fully intact. I think under the surface, some things have been looking a little bit more tired, particularly in the NASDAQ. Some of the leaders to the upside, some of the semiconductor names have been a little bit more tired, but this trend is still fully intact. And, we'll see if any events from this week can change the trend or if we just continue higher. So it wouldn't be impossible for great news to come out throughout this week that actually causes the trend to break to the upside. I think if that were to happen, it actually would be the beginning of the end. And we can look at a couple charts there to kind of reference some similar patterns to what I'm describing. Or you could get an event this week that breaks the trend to the downside, which then might mean that we have a little bit more of a deeper price correction in this market if this trend were ever to break. With that said, though, maybe this market, which has been unable to go down on literally anything, good news or bad news, just stays in this 45-degree angle uptrend, and it just lasts for the rest of eternity.
All right, let's start with earnings. We'll talk about earnings. The big 2 days of the week, there's like over 150 S&P 500 companies reporting in total this week. But of course, the focus being on Wednesday and Thursday, Meta and Microsoft Wednesday after the close, Apple and Amazon Thursday after the close. We've already gotten, who did we get last week? Google. Alphabet was our first major MAG7 named report, Google and Tesla. Looking at the Tesla report, the Google report, and the market response, how are you feeling heading into Meta, Microsoft, Amazon, Apple? Any edge on any of these names that you feel you have?
So the one trend that I've seen pretty consistently this earnings season so far with some of the most important companies, especially the ones that have been up big into their reports, is that it's almost been like the only thing that can break the uptrend that this market has been in, or some of these stocks have been in, are reporting good earnings reports. And I've got some examples here. I think I should have the screen share up and running if you want to pull that up. But it's like you can start with Netflix. Netflix had been relatively unstoppable. I had a little bit of a pullback here in the beginning of July. Then it came out with an earnings report. The earnings report was good. It wasn't the greatest earnings report of all time, but you can't look at that earnings report in Netflix and say that it wasn't good. And look what the stock has done ever since. Kind of nothing, right? It's actually been really weak. Or technically, I think this is like the last stock of the last earnings report. But look at Micron at the end of June. Straight up, straight up, straight up, straight up. This is the earnings report day here. It's the high. The report was good. Go back and look at that Micron earnings report. It was good. Stock hasn't been able to do anything since then. Look at the Google report. Google report was good. Can't look at that Google report and say it was not good. Stock had been in an uptrend and it had been breaking out. This is the earnings day. They gapped it up, sold it down, and we're making new post-earnings lows right now as we're having this conversation for Google. Tesla, a little bit different because Tesla had been weaker into the report compared to some of those other names. And interestingly enough, Tesla, I thought, was like the worst earnings report I've almost ever seen of any company, especially a large company for the PE that it has, to report that poorly. And that's actually the one that's traded higher. So I don't know, maybe the theme is if you report a good earnings report, your stock goes down. And if you report a bad earnings report, the stock goes up. I'm joking there a little bit. But I think what matters most going into a lot of these reports is where the stock is trading going into it and what the positioning looks like for that stock. Like NVIDIA, which is still really far away, per a Goldman Sachs note that I had read like a week or maybe 2 weeks ago now, and it was first starting to work towards these mid 170s. So that NVIDIA positioning was like a 10 out of 10 on their scale. So when I look at that, can it go a little bit higher? Sure, it can. And I'm a pretty big NVIDIA bull. I don't even think that the stock is that expensive fundamentally. They are the railroad tracks of the AI movement, which has been leading the entirety of the market higher. But even for a company that I think the technicals look great and I think that the fundamentals are fine, when you get to like a 10 out of 10 on positioning, you say to yourself, who's left to buy? So now turning over to the companies that are reporting this week, you've got Microsoft and Meta. Microsoft has been on a tear. I absolutely love this company. This chart is crazy. This is the last earnings report here on May 1st. The stock has not had a single pullback. It's barely had like a single red day when you just eyeball this chart in the entire quarter. I mean, that's just crazy. And the positioning on it, I think, and that's probably most important, the positioning on this, I think, is pretty bought. I think it's very owned right now, this stock. So when I'm looking at Microsoft, even though I love the company, really one of my favorite companies that's out there, this stock, maybe it's similar to some of the other ones I was just discussing. The one thing that seems to be able to break the uptrends on some of these stocks is reporting a good earnings report. So I feel like when you're looking at a Microsoft, the report will either be the most phenomenal report you've ever seen in your life, in which case the stock will go up, or it'll be a good report and the stock will go down, or it'll be an inline report and the stock will go down, or it'll be a bad report and the stock will go seriously down. That's kind of what seems to be the trend for these names that have just performed so well into their reports. Meta is probably similar to that also. I know it's been a little bit weaker over the course of the month of July, but this is another one that's just been on such a big tear since it last reported earnings that I kind of think that the risk is to the downside on that. Same thing with Amazon. The one that I think is the opposite actually is Apple. Apple, from my research, is the least owned right now of the MAG7 stocks. So maybe that means that this one, you could just see it hasn't participated. Like compare this chart over the course of the back half of April through now, it's done absolutely nothing. Whereas the Qs have been just straight up and to the right. All the other MAG7 companies have been straight up to the right. This thing just hasn't been owned. I actually think Apple's a little bit expensive, to be honest. Whereas, like a NVIDIA, I just said the opposite. But because the positioning is low and hasn't had a big move into it, I think that this one has a little bit more risk to the upside going into the report. But we'll see what the numbers look like and how the stocks react.
All right. Well, while we are still on the topic of earnings, we got a question from Brant on YouTube. Tesla earnings were terrible. How is the stock 30 off of Thursday's lows? $30.
That's a great question that I don't really know the answer to. Look, what matters, like I was saying, is kind of things I was just discussing, right? So what matters on an earnings report isn't just what the report is. It's the report versus expectations, and it really is also how people are positioned into that report on top of it. So I actually didn't see any real positioning metrics on Tesla going into the report, so I actually don't have strong feedback for you on that one. But I would assume if you look at Tesla, it's another one. It's up a little bit from the end of April, but it's not as strong as like what the NASDAQ has done or what some of those other stocks have done. So there's a good chance that this one is a little bit more under-owned. And how did it so the expectations on Tesla's earnings report was extremely, extremely low. Yet it somehow managed to primarily be, with the exception of maybe their margin number, worse than even the really low expectations. Yet the stock is still rallied. I mean, it got crushed down initially on that day, on July 24th. They crushed it. We actually called out for the team a great short through 310, which happened right on the open and paid you $9 reward on like 30 cents worth of risk within 15 minutes or so of the open on that earnings day. But then on the following day, they announced that they're planning on doing robo-taxis in San Francisco. And it seemed to me like it was just, we're immediately back to Tesla being the hype machine that it's been forever. And that's the only way that it's able to maintain a PE that it has, is the hype around robo-taxis, the hype around robots in general. and everything that's not car related that they're trying to do. I have been of the opinion, based on the evidence that I've seen, that they're not doing a great job when it comes to these businesses that are supposed to be the next businesses for Tesla that bring it somewhere else. So I don't really know where that's coming from. The most bullish thing I could think of for Tesla, if I wanted a real bull case, would be that there's a floor in Tesla somewhere, because somewhere he just does what he's done with other companies that have been floundering, like Solar City and now more recently Twitter, where he just combines it with other companies that are better. So at a certain point you could see a big giant X combination of Starlink and SpaceX and Tesla and Twitter and XAI all into one company to save the Tesla of the world that maybe at a certain point isn't doing as well with the other companies that, I've been saying this for years. You don't want to own Tesla, you want to own SpaceX. And maybe that's becoming less true as time goes on and the valuation's getting so insane in the private market. But that's been where the real growth has been for so long. But it's a private company, so it's difficult to be able to get that exposure. But Tesla, if you're looking at it in its own universe as a car company / robotics company / robo-taxi company, I have no idea how this thing after that earnings report's not trading $100 lower than where it currently is, or more, to be honest. So your guess is good as mine.
Tesla really doesn't trade on the fundamentals of the company, it seems. All right, the other big story of the week besides the MAG7 earnings is, of course, the Fed meeting. Meeting kicks off on Tuesday. Decision will be out Wednesday at 2 p.m. Eastern time. Of course, the real thing for the market is the chairman's presser at 2:30 p.m. Eastern time, especially because we're looking for some more direction on where the heck rates are going to go from here. CME's Fed Watch shows 95% of expectations, 99, I think 99 now, percent of expectations, of course, no rate cut this week. Now we have some Fed officials saying a rate cut might be needed in July, probably not happening. It is a committee, so we all must vote on it. How are you feeling heading into the Fed meeting, and what are you as a trader going to be focused on Wednesday to kind of get direction for yourself on what happens from here?
I kind of think, can you hear that? Is that?
Yeah.
Hey, can you turn his phone off? I'm sorry. I'm at T3's New York City office today, so it gets a little.
Lots of traders in the room there with Derrick.
It's a little bit loud over here sometimes.
Mm-hmm.
So I actually think that the Fed's going to be primarily a non-event, is really my expectation. Yeah. There's going to be no cut. Everyone expects there's going to be no cut. I mean, if he were to cut, it would be an event. That's for sure. In that, the low probability outlier situations, when they do happen, deliver big moves for the market. But I don't think that he's going to cut. So we're not going to cut, and you'll probably get maybe 2 dissenters on that cut who want to cut to happen this time. You still have some people, like you said, it's a committee, who are on that committee who don't think that we should do any cuts this calendar year. But what matters is more like the middle. It's the consensus. So that consensus is probably still going to deliver, I'm going to estimate, 2 cuts for this calendar year. So the real question is what they're saying when you look more towards September, just how data dependent they are. You are finally beginning to see a smaller uptick in inflation that is related to tariffs. I personally think that that's just the beginning. So they're still in a little bit of a tricky situation as you're beginning to see inflation finally increase a little bit, but that also might be happening at the same time as an economic slowdown. So it's that balance, right? They're going to give you the same thing of paying attention to the data. And if the data shows that unemployment's staying low and the economy is humming along, but inflation is ticking up, you might not get any cuts this year. If the data shows that inflation is not ticking up, but the economy is slowing, you might get 3 cuts this year. You might even get more than a 25 basis point cut at a certain point this year. Or if it's the tricky situation of inflation is ticking up and growth is also ticking down, that's much more difficult. That's like the one thing that the Fed would really struggle to fight. But I think that Jerome Powell has made it pretty clear that his view is stable, price stability is more important broadly speaking, than growth. So I think in that situation, if you saw a growth slowdown coupled with an inflation pickup, that they would not cut rates because they're more focused on not letting inflation get out of control. So, but the bottom line is it's going to be data dependent and probably no cut. Therefore, it'll be a non-event is my expectation.
All right. Earnings are an event. Fed possibly a non-event. Something that could be an event is Friday. August 1st is the tariff deadline, the extended tariff deadline that Trump extended it to. We got a deal with the U.S. and the EU over the weekend. Of course, the big deal everyone is waiting for is the U.S. and China. Trump saying today that the global baseline tariff will likely be 15% to 20%. Market reaction to the EU trade deal kind of muted, not that excited. What does that tell you about how the market might react to some of the deals that might come out this week or this deadline that's coming up on Friday?
Yeah, so that was the big question that I posed to the traders in the morning meeting today. Is the EU today going to be a sell the event situation? Because we had a pretty big gap up on it. Futures were gapping up really big at a certain point last night. That was already, coming down by the time I was doing my team morning meeting this morning. But we were gapping up across the board this morning, and can the market sell it? Right now, the SPY is trading negative 0.04%. So we're not red. We didn't really sell it, but we're not up like we were either. And we'll see how we close today. It's like anything else. When an event happens, it is what is the event versus the expectations going into it. And some people have been looking for 10% for the EU. And I was like, if the market, and I really don't know what the market was pricing in on this, but if the market was pricing in a 10% tariff rate for the EU and we got a 15% tariff rate for the EU, the bullish side of that is that you are finally providing some degree of certainty so that corporations have an idea of how they can implement corporate strategy. But 15% is worse than 10, so maybe that actually becomes a sell the news sort of event. But we've seen now with both kind of Japan and EU that they have turned into nothing burgers at this point. So it seems like they were pretty fully priced in the market. And then the implications really more are in regards to, I think a lot of analysts had been pricing in like a baseline broad tariff rate of 10%, and now it's looking like it's going to be more like 15%. And then again, the potential implications of those higher tariffs being priced in onto inflation and the economy. And what we have to remember is that is a slow trickle, right? It's not like we change our tariff policy tomorrow and then on Wednesday we see all of a sudden immediately higher prices in a slower economy. It acts as a little bit of a trickle because, one, these companies do, broadly speaking, a phenomenal job knowing their landscape, knowing what's going to happen and front running it. And as a result, it's like a slow bleed into the economy. Like we only are beginning to see very recently tariff impacts, I think more in like the retail world, like think the Walmarts of the world. You're not yet seeing it in automobiles at all at this point, but it's probably going to happen at a certain point. So, we'll see over time what these numbers actually do. And that's always been the question since back in April. If you remember, the sell-off in March and April was because these tariffs were announced, right? Trump said, hey, I'm going to do tariffs. They're going to be really big. We'll see what the number is. And that sold the market down. But Trump coming out and saying that in, let's say, March or in the beginning of April, it's like I just said, you don't announce tariffs and then the very next day the stock market reacts to the fact that the numbers are worse. This is what we call an event-driven bear market. So the event was Trump announcing tariffs, but that event at that time had no impact on inflation or on growth at that point because it has to work its way into the economy. So the question still remains, and some people would argue that the question's been answered just based on how strong this market's been and the fact that we're at new all-time highs. But the question still remains, does an event-driven bear market such as this turn into a more cyclical bear market. A cyclical bear market is a bear market that is in the economic numbers. It's the growth has slowed down or unemployment has ticked up. That is a cyclical bear market. So we are still really waiting to see if the fear that created the event-driven market actually turns into a cyclical bear market where the actual numbers get worse. We haven't seen that in the numbers yet. So the fact of the matter is, at least for today, the answer is no. That this was economic theory that brought the market down and is not going to translate into reality. I would argue personally in my thought process is that it is going to slow down growth. We are still seeing analysts, really smart analysts, coming out all the time with their estimates on what the implications are of the latest deal. We saw right after the Japan deal was announced last week, Goldman Sachs came out and they said that, you know, it looks like the base rate of tariffs is going to end up around 15%. And our expectations is over the course of the next 2 to 3 years that it will increase inflation by 1.7% and slow down growth to 1%. But think about that, right? That's over the course of 2 to 3 years. It just shows you the slow bleed on effect of this. So you might not see it in just a 45% down market. It might just be more in this market is less competitive compared to other global markets than it had been over the course of the last 15 years. But time will tell.
All right, let's go through some charts if you have any that you can with us. Market at record highs. The S&P 500 has turned red. The NASDAQ, though, is still green. With a market at record highs, what are some of the ideas you're looking at here? Maybe some of the setups you're waiting for, if you're waiting for a pullback on some names, things like that. What are some of the charts that are in your circulation there as a trader?
Sure. So big picture down a small picture. I have to recognize that this market is still in an uptrend, and that is something that you need to respect. Especially these like 45-degree angle type uptrends, like what I was just showing Microsoft. These don't break easily. Oh, and that was one thing I was talking to you about earlier. Let me just pull something up real quick. We're just talking about this week could cause this market to break out, break down, or stay in this 45-degree angle trend. The pattern that I'm talking about there, where you can imagine that, is like if you look at this Coinbase chart, or if you look at Robinhood, the coin's breaking down a little bit, you can see that the stock was in that style of a 45-degree angle uptrend, and then it actually began to break it to the upside. So if you're in an uptrend and you break it to the upside, that means the stock is going parabolic. A parabolic stock is impossible to sustain, and actually a break of this type of trend to the upside is one of the best ways to be able to bring the market to break it down through the downside, if that makes any sense. You start to really chase in the momentum buying, chasey longs, you squeeze out the last shorts, you go parabolic, it can't be sustained, and then it breaks lows, it breaks through support, and the thing is done. Hood here pulled back to 100, and it's holding off that base for now. If you look at coin as a different example, same pattern idea, trending higher, broke that trend to the upside. This then tried to create the support, and it's actually breaking down through that. So I'm actually curious to see, that could be one of the ways in which this market trend ends, would actually be perversely if it breaks to the upside, like one final bang higher that really squeezes out those last shorts, and then it can't be sustained, and then you actually break the upward trend line, like the lower band of that trend line to the downside. So we'll see. But broadly speaking, we're at a point here in the market cycle, especially as we get into August and September, which has seasonal weakness, and especially as my thought process is, you're going to start to begin to see the economic impacts of tariffs in the economic numbers now over the course of the next couple of months. I do not like new big picture longs here, though I can't look at this chart of the S&P and say you should short it, because it's just trending up. I think if you want to short, you wait for one of the two things I just said. You wait for this to actually break up, and then you short that shooting star doji type of candle after it goes parabolic with a signal. Or if you get an event that causes it to gap down, let's say, or trade through intraday, the lower band of support, then you can push it to the downside. So In other words, from a market perspective, I'm kind of in wait and see mode. The trend is higher, but I don't want to put on any new longs. I, in theory, would like to short, but I need one of those signals in order to short. So until I see one of those two things, I'm not really doing too much with the big picture of the market. But this market right now has been insane because you're getting all the squeezes. And I think even if you're cautious on the market right now, that you could be focused on one individual stock after the next. And there's so many of these. My team and I, we made a whole list of these tradable names that you could be focused on. GoPro. Some of them have come down already, but GoPro, D-Nut. Like, look how crazy some of these went. Woof. KSS, that short, we shorted that into $20. It was incredible. Neo was one that was on there. That's now come down a little bit. I was short DNA Thursday through Friday of last week. I'm out of it now, but that one was another one. I mean, you just have one chart after the next of these short squeezy names that have just been going crazy. Skills popped up on the list. I forgot this company even existed. It's like a mini version we're in right now. It's not even that mini, of late 2020, early 2021. We are seeing that environment again happening right now. I've been very active in KS to the short side. QS to the short side. I still have some on now. I've got a much smaller position than I had because this is starting to really work in my favor. On the flip side is this JOBY. Been super active in this one also. I mean, these companies, QS and JOBY, they don't even have revenue. They don't even have revenue. But this thing, you know, went from, they've all been doubling or more than doubling or tripling. And the point is the price action in these names is great. So you could be trading these almost every single day, and you don't even have to be watching the market. You're just paying attention to the market in the background, waiting for the signal that break higher or that break lower to get a little bit more active from a market perspective, and you just trade the crazy names for cash flow every day while you're waiting.
With the meme stock craze being back, what does that tell you about the overall market environment and the traders that are active in this sequence?
That tends to be late cycle. So you know, there's a couple things that I would point to. So I actually just did this recently for the team last week, where I tried to break down everything in the market that I view as either bullish, bearish, or more neutral. And I could do it with you really quickly. So on the bullish side, you have the technicals, super bullish. We just talked about it. The market dynamics are still bullish. You still have an underlying trend from vol control and CTAs, though soon I think that's actually going to no longer be bullish. I think pretty soon that's going to go from bullish to neutral, and potentially even could go from neutral to bearish in a down move. But for now, market dynamics are still bullish. A weak dollar is bullish, but I've been watching 27.50 in the UUP. I think if the UUP, and it's having a really strong day today, I think if the UUP gets above 27.50, that the dollar is starting to strengthen, and then that won't be as bullish for the market, but the weak dollar. The AI theme itself, so watch semiconductors. I think that's been the big theme that has enabled this market to move in the way that it has. That's on the bull side. On the bear side, first thing I would point to is sentiment. And when we're talking about sentiment, that's the meme stocks, right? That's the first place you can see it, is all these meme stocks that are going crazy. Sentiment is getting way too frothy, and I would say that's bearish. I would argue that valuation at this point from the S&P level as a whole is also getting expensive and is bearish. But things like valuation and sentiment are not timing tools. They're not timing tools for the market. They're things that you pay attention to that let you know to be cautious, but things that you pay attention to let you know that you are a little bit more late cycle with things, but it doesn't mean that we're necessarily going to crash tomorrow. Another one that I've been noting as bearish has been concentration. All the concentration has been in the AI trade. I saw a chart last week that showed that concentration in high beta stocks right now is the highest it's ever been. And it's even higher than the late 90s, early 2000 tech bubble. So concentration is getting a bit crazy. I would put seasonality now at really starting August 1st. I would put seasonality in the bearish camp. So we still have some strong seasonality here through July. But I think starting in August 1st, seasonality becomes bearish as well. And I still think that the macro is bearish. I've been saying it's like a tale of two economies right now. It's the AI economy versus the tariff economy. The AI economy couldn't be more bullish, and the more macro economy I would put in the bearish case. It's a little bit more subjective, though. Overall positioning right now on this market is neutral. It's the one thing I would really point out that's neutral. And I would say the one worth watching is interest rates. Interest rates at a certain point could start to really matter. They don't at the moment. But if interest rates were to really increase further, they very quickly could. So that's where we're at. Big downtick in Palantir right now.
All right, so we don't know. Is Derrick a bull? Is he a bear? Is he neutral? Lots of conflicting things happening in the market. So
the most important one, if I can just circle back to it, the most important one,
technicals.
It's the technicals, and they're still intact. Palantir is getting crushed here. I don't know if there's a headline.
I don't know. Let's look. But all right, Derrick's a real trader. So as you can see, he's trading. We want to let him get back to it. I see big puts buy on Palantir, but I don't know. Don't see anything major. All right, we'll let Derrick figure that out. Everyone else, here's your heads up that Palantir is getting crushed. You can go to t3live.com/DOLive if you'd like to get Derrick's free ebook about prop trading, the benefits of prop trading, how you can work with him at T3 Trading Group. Again, he is the head trader there. So if you work with T3 Trading, you work with Derrick himself every single day. Have a great rest of your Monday, Derrick. A good week. Lots of news flow coming up. So I hope it's a good, active week for you and a profitable one. See you next week.
Thanks, Greta. Talk to you soon.